Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of the Big C. I'm Manisha and with me is Nigel Dsouza, back with your daily dose of commodities, cryptos and currencies.
Hi Manisha, busy day, lots happening on the global front as well. We have tariffs, we had the Fed meeting overnight, you have earnings as well, and from an equity market perspective, you have the F&O expiry as well. But before we get to the commodity space, let's take a quick check on global equities. A slew of developments overnight, which were dictating moves in the markets. Wall Street closed Wednesday on a mixed note. The S&P 500 was marginally down. The Dow Jones slipped 170 points at close. Tech-heavy Nasdaq, though, somehow notched up a green close. Stock futures, meanwhile, have spiked on the back of good earnings that we have seen from Microsoft as well as Meta platforms. The Magnificent Seven titans, both Microsoft as well as Meta, they're up between 8 to around 11% respectively in extended hours. Stocks in Asia Pacific, though, they're trading largely in the red. Investors are trying to make sense of what the Fed had to say, and also from the decision coming in from the Bank of Japan, who stood pat on the short-term interest rates for the fourth consecutive time. The street is also evaluating US's blanket 15% tariff on South Korea and the 25% levy on the Indian imports with an additional penalty as well.
Oh, well, yes, as you mentioned, there's just so much happening in the international markets there with the cues coming in for the Indian space as well. But there is definite impact on the crude oil prices, which are holding firm at around 6-week highs currently after Trump imposed that 25% levy on Indian imports coupled with additional penalties. In fact, U.S. also warned China, the largest buyer of Russian oil, that it could face huge tariffs if it kept buying from Russia. Meanwhile, the US dollar index continues to advance against the major peers on the following better than expected US GDP numbers. And as the Federal Reserve held interest rates steady at its July meeting, as you can see on your screens, we are holding very close to that 100 level mark when it comes to the dollar index as well. Well, keeping it with the big headline then, and the US President Donald Trump has said that imports from India will face 25% tariff and also announced an unspecified penalty over India's purchases of the Russian weapons and energy that could be imposed on the list of August. However, later at the press conference, he added that the US was negotiating with India right now. Let's listen in.
Well, we're negotiating right now, and it's also BRICS. You know, they have BRICS, which is basically a group of countries that are anti the United States, and India is a member of that, if you can believe it. It's an attack on the dollar, and we're not going to let anybody attack the dollar. So it's partially BRICS, and it's partially the trade situation. It's the deficit. We had a tremendous deficit. So, as you know, Prime Minister Modi is a friend of mine, but they don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens. It doesn't matter too much whether we have a deal or whether we charge them a certain tariff. But you'll know at the end of this week. August 1st is a very big day for this country because money is going to pour into the United States like we've never seen before. Well, we're talking to them now. We'll see what happens. Again, India was the highest or just about the highest tariff nation in the world, and one of the highest, 100 points, 150 points or percentages. So India was one of the highest in the world. They had won 175%, and higher than that. You know, there's another higher one is Canada. They've been charging our farmers 200%, 300%, 400% for years, and nobody did anything about it. But India is one of the highest, so we're going to see. We're negotiating with India right now.
Well, the other big headline, of course, was the Federal Reserve keeping the benchmark lending rates unchanged in a move that was largely expected by the markets. Jerome Powell said that there was no decision made on how the central bank will proceed at its September meeting, dashing traders' hopes for a rate cut then. He also said the policymakers must wait and see the effect of tariffs before they proceed. Let's go across to CNBC's Steve Leisman to make sense of the outcome.
a somewhat divided Federal Reserve, leaving rates unchanged at the 4.25% to 4.5% range, with two governors dissenting as expected, Governor Bowman and Governor Waller, who preferred a quarter-point rate cut. It's the first time two governors have dissented since 1993. 9 votes were there to keep rates unchanged on hold, including the chair, 3 Fed governors, and 5 presidents. That's to say the dissenters didn't really get too much additional support over the 6 weeks they've argued for this cut. Swings in exports, the statement says, continue to affect the data. Growth moderated in the first half of the year, they note, which is from data we got this morning. And here's the line that didn't change, that people thought might give a dovish signal. It does not. It simply says uncertainty about the economic outlook remains elevated. That's the same line they used last time. They actually removed a word where last time they said uncertainty has diminished but remains elevated. They took out the diminished part. So they still see high uncertainty. That was an area where if there was a change, that was going to maybe signal a dovish move or a dovish move ahead. That would have changed. It did not. The Fed said inflation remains somewhat elevated, same language as last time. Unemployment is low. The labor market is solid, the statement says. And the committee is attentive to risks on both sides of the mandate.
All right, and with that, the context is set on what we really are going to talk about on Big C. Let's go across to our first guest of the day. Carsten Fritsch is Commerzbank, from Commerzbank now joins us on the show. Carsten, hi, thank you so much for joining in. And there's just so much happened in the last 24 hours. It's difficult to start picking up loose ends on where to start or from. But I do want to talk about copper first, because an 18 to 20% of a decline in the U.S. markets in that commodity, after we do understand that refined copper is excluded from that list. What do you make of copper prices going forward from here?
The big price reaction on COMEX copper prices was the surprise that a lot of copper supply was exempted from the tariffs. Only a small part of end products are being tariffed, and so this big premium of the COMEX price versus the LME price evaporated. And it's quite logical, because a lot of copper flowed to the US because of the big premium. COMEX stocks are at the highest level in 20 years. There was a lot of forward buying, and now with most of the copper not being subject of tariffs, the demand from the US will decline, and so we see a price moderation. It's also possible that some of the copper from COMEX will flow back to LME stocks, lead to a stock build there, which could also weigh on the copper price at the LME. And so it's quite possible that we will see also a moderation of copper prices on the LME.
Okay. So would you say that the correction is all in prices now, or would you say that there is further decline that we can expect in copper? And if yes, then what are your levels that you're looking for by the end of this year?
I think a lot of the correction in the COMEX price happened. So the big premium of almost 30% above LME price has evaporated. So both prices are almost at par. So there's still some downward potential. Our price forecast for LME copper for the end of the year is $9,500 per ton. Current price is roughly $9,700.
Hi, Carsten. Good to see you, Ben. What about silver? You know, I recall earlier this year, you all had made that bold call, right? That silver could get its act together. It's actually done very, very well. Last 3 months, it's outstripped what gold has given. Is there more to come for silver?
We still see some upward potential for silver, but most of the increase should already have happened since the gold-silver ratio came down quite quickly from above 100 to below 90. And from now on, most of the price increase of silver will go in tandem with gold. And so the focus here is much on the US monetary policy. We expect Fed to cut interest rates starting in September. The market is not quite so sure after yesterday's FOMC meeting. So we see some upward potential coming from this side, which will benefit gold and silver as well.
Carsten, do let us in on Commerzbank expectations on many of these commodities then. Copper, you've spoken about. Silver, you're talking about upside. So what kind of levels are we looking at? And how would you look at gold prices moving from here to?
We see silver price of $39 per troy ounce at the end of the year, so a slight upward potential from current level. And our gold price forecast is 3,400. We were there earlier this week, but prices corrected quite significantly in recent days because of some easing fears coming from the trade dispute and also scaling back of rate cut expectation. But as I mentioned, we expect Fed cutting interest rates starting in September. So this expectation should return to the market and should benefit the gold price.
From the precious metal space itself, gold, silver, palladium, platinum, all of them have had a good run. What would your pecking order be among these?
I think, as I said, gold, silver benefit from rate cut expectations, gold from demand as a safe haven. Platinum, palladium were also sharply undervalued until 2-3 months ago, but also reduced this undervaluation quite significantly due to the rally in the last few weeks. And like in silver, we expect both rising more or less in tandem with gold, with platinum rising a bit more than palladium because the fundamentals for platinum are still stronger than for palladium.
Carsten, I want to talk about the crude oil prices also because July perhaps is the best monthly gain since September 2023. The support comes in from trade deals happening, from the sanction concerns on Russia and Iran as well. And then, of course, the markets have been looking at a lot of economic data as well. We stand at $73 per barrel for the Brent prices right now. What is it that you are watching? And are you looking at higher highs from here for the crude oil prices by the time we've ended this year?
I think the strength in the crude oil price looks very surprising, given the fact that supply is rising quite strongly from OPEC Plus, which will decide at the next meeting very likely to add another 550,000 barrels per day in September, and so completely reverse the entire voluntary production cuts 1 year earlier than planned before. At the moment, we have seen very strong seasonal demand in the United States because there's a summer driving season. Then there's stronger demand in the Middle East because of the heat and higher demand for oil for power generation. But when this period of strong seasonal demand is over and demand moderates in autumn, there's a prospect of a big oversupply in the market because of this OPEC Plus production increases. And of course, much depends on the risk premium regarding sanctions. We have to wait for more clarity here. If Trump really imposes secondary tariffs for China, if the war in Ukraine continues, that would put the ongoing trade talks US-China into jeopardy. There's not very clear that Trump will risk the trade deal. So if there's not such a big uncertainty regarding sanctions or supply shortfalls, then there's a strong likelihood that we will see lower oil prices in the autumn. And our price forecast for Brent end of the year is just $65 per barrel.
All right. Well, as you said, yes, there is a surprise on the price rise. But yes, it is about uncertainty on tariffs and the kind of sanctions that the markets seem to be looking at. And that is what is about the political premium that we are seeing in prices right now. But I get your point that you're looking at $65 of an average or a price before the year end. So we are still a lot far away from those kind of numbers. But Carsten, as always, thank you so much for joining in and giving us a sense on metals, precious metals, dollar index, and of course, energy as markets as well. With that, it's time for a short breather on the show. On the other side, a very interesting conversations on the crypto assets is lined up. Stay tuned.
Welcome back. You're tuned in to the Big C. Well, shifting focus to the cryptocurrency space, it's almost been a year since crypto exchange WazirX was hacked, spurring losses of around $238 million in investor funds. The exchange ceased to operate soon after. WazirX, in fact, has been reorganizing operations under a Singapore-based entity. There have also been reports of WazirX moving funds from Bybit. The last year has been litigation, court hearings, funds stuck, and lost opportunities. Manisha Gupta caught up with industry experts, Chirayu of 9 Point Capital, digital payments expert Sanjay Saxena, and India Tech ORG CEO and President Mr. Ramesh to take stock of all that's unfolded in the year gone by. Let's listen in to that conversation.
The last 1 year has more or less been like knocking on closed doors, because I personally have tried approaching various authorities, various courts. Anyone who wants to hear me on this matter, seek cognizance of the same. I am personally an investor in the cryptocurrencies market, in the VDAs, since 2021. And I was a firm believer in this one coin called XRP. This coin has now gone up 600% in price. What WazirX is now doing is, there were two types of tokens, hacked and unhacked. My coins were not hacked. There were coins which were hacked. For example, Ethereum and Shiba Inu. XRP has gone up 600% in price. Ethereum and Shiba Inu are still at the price at which they were 4 years ago. WazirX is now in a conundrum. What has happened is no doubt very unfortunate. WazirX is now using funds from other users to pay the users who got their tokens hacked. This is something which I personally see as a violation of my fundamental rights, because they are socializing their losses. It is the onus of the reserve. 2 weeks ago, CoinDCX got hacked for $41 million. Within 17 to 24 hours, not only did they resolve the entire thing, but also made sure that any person who was an aggrieved party could withdraw their assets and could take the more money and move to another exchange if they wanted to. It's been a year. We are now fighting this in Singapore. WazirX since 2017 was carrying out its operations in India. Most of its customers are Indians. They are registered with the Financial Intelligence Unit in India. Why have they gone to Singapore? Right?
So, I get your point here, but let me come to you, Mr. Saxena. And you look at digital payments, and with the way things have really worked out and everything that Chirayu put out, I'll add one more to it, that is that the refunds perhaps are happening in rupees and not in crypto. So that is where another loss perhaps comes into these investors there. How have you read it all, and what is the solution that you would want to put forth?
Thank you, Manisha, for having me on this. Let me tell you the current resolution. It leaves many questions unanswered, rather providing a solution to the beleaguered investors or platform users. To cite few such, without going much into the detail, cite few such examples, there is no clarity as of who is the owner, where the ownership lies of the cryptocurrency on WazirX, to whom it belongs, whether it belongs to Binance, ZI, or the users as an unsecured creditor. There is, I generally say, clarity in the currency. Clarity is the currency in the digital ecosystem, and much more when we dealt with the VDA. In the proposed resolution, the funny part is, in the proposed resolution, it is the majority or the 75% of the voting, those who vote, not the total, the creditor which represent, unlike in the NCLT resolutions, where the committee of creditors, 2/3 of the total have to vote in favor of the resolution. There is nothing such as such in this case. So my point is, there are many operational issues and the unresolved questions which is not there in the proposed in the resolution plan. And in fact, the current plan doesn't respect, if I have to say, the user's asset right. This is not a mutual fund. Crypto asset class need regulatory fairness. This is what I want to say.
Mr. Kailasam, interestingly, Mr. Saxena also talked about NCLT here. Now, we are talking about an area where it's more about KYCs, the regulatory authority, grievance cell, etc. is not there. What's your sense? What is the solution that you see, even after a year, where we are still looking at third-party audits, where we are still looking at some accountability?
Well, I think hearing both the panelists, I think one thing is pretty clear, that there is a need for guidelines and standards in digital asset resolution per se. Investors are raising these concerns, and that also signals that there is a need for maturity in these areas from a governance standpoint. The observation that there is growing need for all of this signals the need for I would say a standard or something of that sort to be built in the digital asset resolution process. Investor concerns about resolution refer to clear procedures for handling things like insolvencies, asset recoveries, dispute resolution, and overall legal certainty in the event that we are supposedly facing such issues. And regulators worldwide are grappling with this and refining the frameworks quickly on digital assets. For example, jurisdictions are already implementing what is called digital asset resolution packages, DARP, to address insolvency scenarios. In essence, investors are also raising concerns about resolution standard and so on. That also signals the fact that investors are not here just for high returns, but also foundational elements of a well-functioning and secure financial market in the virtual digital asset space. And there were examples given on how quickly one exchange was able to resolve versus other which wasn't able to. And this is, I think, a critical step which India needs to take towards digital assets being fully integrated. Investor, I would say, rights and the methodology being clear-cut laid out from a what you call a governance standpoint.
Let me come to each one of you very quickly as a one-point agenda. If something that needs to be done right now, what that should be. And Chirayu, let me come to you first. What is the solution, one-point solution that you see on this?
WazirX should be liquidated. WazirX is allocating funds in different jurisdictions for lawyers as well as the recovery of funds. In the latest affidavit, they have written, we want to spend millions of dollars to fight North Korean hackers. You are telling me Nigel Shetty is trying to take on Kim Jong-un. They have conducted thousands of hacks. None of them have ever been traced. Nigel Shetty has allocated a budget which is north of $50 million for recovery of these funds. They're never coming back. Rather put these funds to better use. So the only solution is liquidation of the company.
Okay, I hear that word. Mr. Kailasam, what do you think is the solution right now?
Well, I think the solution is that investors need to have this clarity. Investors, I mean, whatever schemes are being put to court have to be tested out. I mean, it has to be in the most transparent manner. I think it has been called out in the court multiple times. The fact that whatever has been offered is going through a grind is synonymous of that. But at the same time, I think Indian investors who are most affected in this needs to have a voice to raise such concerns. And I think it is also important that government of India needs to step in and say, this is Indian investors and we need to have a framework and a protection mechanism that can be taken up in courts, because
in the country itself.
When a battle is being fought outside the jurisdiction, the likelihood of investors having the wherewithal to go represent and make the case for themselves becomes limited or stunted to some extent. And I think that legal firepower has to be given in some form for investor protection.
Mr. Saxena, your final word on this?
Yeah, I agree with my co-panelists. See, there is a very limited access to the investors in India, and any resolution to revamp, to revive this with a lot of operational and other ambiguity looks to be very difficult. So, without any further loss to the investor, my suggestion is immediately this should be referred to the NCLT. Besides that, some forensic audit and other measures be taken to fix the responsibility, so that I think there is no other way out to in the interest of the investor. They should get immediately what is left over.
So liquidation to NCLT, to coming out with strong regulations and legally enforcing those regulations, as well as few of the things that our panelists are telling us on what really can be a recourse for what has been happening for the last 1 year as well. Gentlemen, thank you so much for joining in. Appreciate your time.